for joining us. This particular, for the next 60 minutes, we'll try and with my colleagues that I've known for quite a while, me and Herschel comes back from the debating BE and transformation, Kura, the television days, Adrie. We have not interacted a lot, but I know Adrie from the PPRA sessions that I used to do in the Western Cape. So what we're going to try and do today is to try and explore what we expect as practitioners in the industry, as players in this, as professionals. What are we expecting in 2025, and what are the trends and the things that are going to happen? The presentation and the conversation in the next 60 minutes might sound like it's all over, but we'll try and bring it home. And the main focus would be around just looking at specific things that we think that would influence the industry and specific things that we think are playing out. Some of them is a continuation of 2024. Some of them are a new things that are coming to the market. And then I'll try my best to guide the conversation so that you don't get lost in the madness. So Adrie is the Chief Operating Officer for Huizemark. She's also the franchise manager for Huizemark, and also she's responsible for compliance, training, and she'll give you detail. And I'll tell you the format that we're going to follow. And Herschel Jawitz is the Chief Executive Officer. I saw in the profile they say Chief of Operations Officer. They've demoted you. I'm not about to demote you. Herschel is the Chief Executive Officer for the the Jawitz Group and the franchise group, the real estate franchise business. Kura Chihota, a former broadcaster, is currently the regional representative or the regional coordinator for EXP Realty. It's also a franchise group in South Africa. It's fairly one of the new ones that have arrived in the country. One of the things that I want Kura to cover of late, very recent, we were having a chat yesterday online, that he got into a very interesting position. Towards the end, he must share with us what this thing is about. It's about an Africa real estate network. So all of the real estate agencies across the network, across Africa, are coordinating, and they've built a network. And before we finish, if you could share a little bit about that and a little bit about what's happening on the continent in terms of real estate, and then how it's impacting everybody else. And ladies and gentlemen, my name is Mashilo Pitjeng. I'm the Managing Director of BLK Asset Solutions. We are a REIT solutions company, so we focus on market studies, development studies, feasibility studies, and we also do property valuations that are our forte. Before we start, I'd like to thank the Academy of Real Estate and of Construction and Real Estate, ACA, as it's pronounced, is a division of the Institute of Construction and Real Estate Knowledge. They are a professional development or continuous education and career education institutions. They were formed in 2021, and their existence in this industry is to focus in professional development, continuous career education, and events that are linked to professional development. And this is one of those events that are linked to professional development. The way that we're going to handle today is that I'm going to give each one of the speakers time, about 10, 15 minutes, that they can introduce themselves, talk about their organization, talk about what they do, what they wake up to do every morning, what gives them a drive. And then after that, if they can take us into the topic and the theme of the topic in terms of what are we expecting, or what do they expect as professionals and experts in the field in 2025. And then after that, then we'll do a Q&A. At the end of the 60 minutes, some of our speakers might leave in the panel, but the last 30 minutes is actually reserved purely for Q&A. Depending how long or how short it is, then the event will come to an end. In my preparation for this particular session, I was quite intrigued by 3 articles that I've seen, actually 4 articles that I've seen. One of them is the articles that Adrie Barnard and participated in, which was, about the industry and about the expectations, and I got fascinated about what she said, and hopefully she will share about those thoughts. And the other one was where also Herschel shared his thoughts around what his expectation of the industry and the real estate industry in 2025. More than that, there were two other articles that I've seen. And the reason why this fascinates me is because part of our business and part of my profession is that I spend quite a lot working with futures. I'm a student with the Stellenbosch University, a postgraduate for future studies. So we look at trends and what. And there are two articles that fascinated me. And then later on, I'm going to ask questions around that. There was an article that was published by a research economics on behalf of Uber. I'm not sure any of you have seen it, where she looked at the housing market in terms of the recovery over a very long period of time. And you will find that article on LinkedIn by Sandra Gordon. So Sandra Gordon wrote an article around that recovery. And she breaks down each of the regions, and she's got an expectation around a certain percentage, 3% recovery, whatever the case might be. And if you compare that to Property 24, which is expecting that the real estate market is going to recover, and they're expecting a 2% growth in the real estate market. So the number is somewhere there. And you speak to people like Kura, who would say to you, yeah, the green shoots are coming, but there are blind spots that we must look out for. And those blind spots are, Johannesburg people, I don't have to educate them about water and what's the effect of that. How is that going to affect the market? The budget speech that didn't happen yesterday. There was an increase of VAT of 12%. We know that in real estate, VAT is one of the important inputs that affects pricing. What would have been the effect of that, or what's the effect of that? And I'll test the opinion of the group that is here. And what's the story about semigration and Cape Town? Is it still the story in 2025, or we have moved on to something else? We're no longer on semigration. We're no longer on the Western Cape and the expectations around the Western Cape. And the same article, and I'll go to the last one, that Sandra penned down, she spoke quite a lot about Tshwane. To say in Gauteng, Tshwane is the one area that is expected to continue to strengthen because the fundamentals are back. There's a number of things that are happening. So we will be looking at regional perspectives in terms of whether it's the Western Cape, is KZN, Gauteng, wherever else we're looking at. And with Kura being here, we'll also look outside the country to say, what are those things that we should look out for? We know that some of the buyers, there's a certain percentage of buyers in Johannesburg and the Western Cape, which are non-South Africans. What's the impact of that with regard to the current geopolitical things that we're facing, whether it's Trump or it's the land expropriation without compensation, all of that, we'll try and see if we're clever enough to go through that. The last article that I bumped into is by somebody that most of us know, Francois Verhulli. And Francois Verhulli was quoting Catherine Cox with regard to what, and she's talking about the new markets in housing. There are emerging markets in housing, whether it's in terms of township economy or township products, affordable housing is redefining itself, student accommodation, and all of that, to say there is a market that is emerging, and that market, one, is disrupting some of the traditional market, particularly on the rental space, and those markets are something to watch. They have been emerging for a while. And part of those markets, they're beginning to influence how financing and finance happen, how finance products in the market are happening. Capitec has now a bond or a financing product, and those things are happening. And we will look at that to say, what is the effect of that? We know that for quite a long time, John Lewis also did an article around building plans passed, and he has indicated how the market, how the building plans passed and the building plans completed have declined over time, and is that a reflection of the changes in the market that has been happening? So as we begin, it might sound like we're all over, but we're really not. I'm just laying the ground to make sure that we understand what are the things that we need to build on, what are the things that we need to work on, and also to guide this panel of people who are much smarter than I am and much more experienced than I wish to be when I grow up. And I will start with you, Herschel. And from there, I'll go to Adrie to say, introduce yourself. And then after introduce yourself, just give us a sense of what your expectations are in terms of 2025. And then what are the things that you're looking forward to? And what are the things that you think are the blind spots that we must look out for? Herschel, go ahead.
Thanks so much, Mashilo. Listen, I now that you've told me my company has demoted me to the CEO, I'm not sure I can introduce myself for that long, and I wouldn't want to anyway. So just a little bit of background. My name is Herschel Jawitz. I run our family business, which is Jawitz Properties. Some of you may remember it as Herschel Jawitz Real Estate. It was founded by my father in 1969. So this year we'll be celebrating our 56th year. And my father, who's 90, is still the chairman and still very much involved in the business. So when you're navigating challenges in the market, sometimes having lots of gray hair around the table with experience is good. And we're a part-owned, part-franchised group. We have approximately 50 offices around the country, some of which we own and some of which are franchised. And that's really the group and an introduction to myself in a nutshell. I'm 58, married, have a young son. I got started late, so I have an 8-year-old son. And this is going to be my 28th year, I think, in our family business. So that's really the introduction. In terms of maybe just to separate between the market and the industry. So the market is obviously, what I think may happen in the residential market this year in terms of, as you mentioned, some of the trends, property prices, volumes, both on a national level and at a regional level, and some of the factors that may influence that. And then separately, the industry, what are potentially some of the opportunities and the challenges facing the industry, which is made up of the real estate agencies and the real estate agents around the country. So maybe just to start with the market. As you mentioned, we live in a very dynamic, very fluid world and a country without using all of this fancy terminology. And the situations both globally, which impact on us, and nationally within South Africa, seem to be changing as often as the weather in both Johannesburg and in Somerset West. And so if you look certainly from where we were a year ago to today, and I'm not going to use the word green shoots, I think too many people use it. I'm going to use the word positive signals. But if you look at where we've come from a year ago to where we are now, in terms of the politics of the country, in terms of Eskom, as I often say, it's hard to be an optimist in the dark. In terms of, we're into the interest rate cutting cycle, in terms of just the general level of consumer confidence and sentiment, which is still low, but certainly better than what it was. Things are very much more positive. And I think for the first time in many years, probably in the last 3 to 4 years, other than post-COVID, when interest rates came down to 7%, we may have a little bit more of a tailwind in the market than the headwinds in which we've been facing over the last couple of years with sentiment, with politics, with Eskom, and with a prolonged period of high interest rates. So, people bandy this word a lot called resilience, and I'm trying to ban resilience from my vocabulary because I don't think we have to be resilient all the time. It would be nice to have a tailwind. It would be nice to be swimming with the current a little bit. And I think for the first time in many years, we have some of those factors, financial sentiment, politics, Eskom, that are going to help generate a little bit of forward momentum in terms of the growth in the residential property market. And by growth, I mean growth in property prices and growth in the number of sales, the volume of sales across the country. So that's sort of a broad overview. But having said that, if you had asked me around sentiment, confidence, and growth in the market in October, November of last year versus February and March of this year, obviously, as Kura has mentioned, and I don't want to take away from what he's going to say, but there are some blind spots. So we have some international blind spots around new political leaders, which are creating some concern and some noise both locally and internationally. Based on some of the inflation figures and other figures, potentially the interest rate cutting cycle, of which we've had 3 interest rate cuts, is going to be maybe a little shorter and not as deep. So we may only get one more cut this year, where we anticipated a few more, and it might only end up being cumulatively at 1%, whereas maybe a few months ago we were anticipating maybe 1.25% to 1.5%. And then you factor in some of the issues around the budget and potential VAT increases, and so the situation is really fluid. But overall, I do think that the market this year is going to be far more opportunity driven, both within our industry and for buyers and sellers alike, who for the most part, sellers have had a tough time. So I do think that for the most part around the country, it's going to remain still a buyer's market. So property prices are still relatively low and offering good value, and especially in provinces like the Gauteng, KZN, the Eastern Cape, where for the most part, property prices in some areas have actually been declining even before inflation, never mind after inflation in real terms. And then obviously you have the Western Cape, and specifically Cape Town, which seems to be the outlier, and for a whole host of reasons around infrastructure, sentiment, and confidence. And certainly this is not a political discussion. The property market in terms of prices has been far more resilient than in virtually all of the other provinces around the country. So I still expect it to be, for the most part, a buyer's market. But we have seen an increase in demand. We have seen an increase in activity across the country, driven by lower interest rates and an improvement in sentiment across all price sectors. So lower market, mid-tier, and even the upper into the luxury market. But I still think for the most part in 2025, buyers across almost all parts of the country are going to still be able to buy at good value, at lower interest rates. And the banking environment remains very positive in terms of bank lending, the loan to values, and the interest rate concession. So overall, I think it's going to be positive for buyers, still offering good value. I think for the first time, sellers are going to start to see better price growth than they've seen before, especially in provinces like KZN, the Gauteng, Eastern Cape, Free State, and others. The banking environment remains very positive, so access to home loans, and obviously dependent on credit and affordability, I think still remains positive. I know the banks have recently had some fairly negative publicity about who has access to those funds across the country. But I do think sellers will start to see some early signs of slightly better prices. And then from an industry point of view, I mean, obviously there are all sorts of factors around transformation. And, we have a regulatory body, the PPRA. We obviously have industry bodies such as Rebosa. So I think transformation remains an imperative. But it is my view that what we need to have is a healthy market, and a healthy market drives revenue and it drives profit, and that allows companies to reinvest into their businesses for growth, for employment, for training, and all of those really work together around transformation. So I think that's number one. Number two, I think as markets improve, generally you see a lot more sort of small agencies coming into the fray. So I do think competition gets a bit more fierce, and often we find that smaller agencies tend to come into the market and compete on the basis of, for example, lower commission rates. And that obviously provides consumers, buyers and sellers with better opportunities. But I think it creates challenges within the industry, because competing on price is not always good. So I think that's going to be a challenge. I think, AI seems to be the buzzword, and I think it potentially provides for opportunities within the industry, around just taking away from some of the cumbersome tasks, and allowing us as estate agents and agencies to be a little more customer focused and customer centric. And I do think predominantly, and we talk about it a lot within our organization, is that despite the advent of AI and often the talk around technology, I do think that in the current world that we're living in, including in South Africa, now more than ever, our clients and our customers are looking for more of that human engagement. And so I think, for companies, certainly companies like ourselves, I think you have to be brand driven around your brand and your culture. I think you have to be technology enabled. I think that's very, very important. But I do think always that you have to be people led. And I think that over time, it's easy to copy technologies. Technologies become more accessible, so hard to differentiate on technology. And the key differentiator for me is always going to be the quality of our people, because as my father has always said, we're not in the house business. Ultimately, we're in the people business.
Thank you, Herschel. I think it's a mouthful. I'm not going to try and paraphrase, but the points you've made are quite important. That we've seen the positive signals. You're not one of the doomsayers, I see, and competition in the market is very important. And I like the fact that you touched on the international hot blind spots to say there is some influence and some impact that we're going to feel. We don't know what it is right now. We will have to ride through that. If it becomes a storm, we're going to have to find a way to survive. If it's a rain, we'll buy umbrellas. But it is a recognition that we are in a different environment altogether. We don't have the same friends as we used to have previously. And the acknowledgement, although you didn't say it in so many words, is that there is local considerations, the GNU and all of that, even though you didn't say it in that particular way. And the fact that we must not forget that we still have a budget that needs to be passed, which has a direct impact on South Africa. And somewhere later, when we speak, one of the questions I'm going to ask to the panel is around your view on the tax burden in real estate. And I'm not only talking about VAT, I'm not only going to be talking about the transfer fees, but we're talking about the municipality shifting their responsibility towards residents. How is that affecting buyers and sellers? How is it affecting prices in the market? And how is it affecting volumes? That particular. But before we get there, I need to go to Adrie. If you can share your thoughts, Adrie, and first start by introducing yourself. Thank you very much.
Thank you, Mashilo. Thanks for having me today. First of all, my colleagues here from other agencies, very esteemed, and glad to be part of a panel with you guys. I think we all share the same view about what we don't want to call green shoots, but the positive signs in the market. My name is Adrie Barnard. I've been in property since 1986. I've done various aspects of property over the time. I've been a builder, developer, a touch on mortgage origination. I lived in America for a while, was involved there with property valuation, and back to South Africa. I rejoined local estate agencies probably for a year or so, and then went back to starting my own company at that time in Bedford View. But I'm a registered principal. I've been registered as a principal since 1986. And although my main focus is Huizemark and helping our franchisees to make more money, that's my job. I still run a team. I have a day-to-day experience of what's happening on the ground. I have agents on a virtual basis in most of the provinces, and we started in Huizemark in 2010 with our first virtual agency. It still exists. That I established way back when, and we've sorted out the hows and the whens and the whats about virtual agencies. Today, virtual is a word. That time it wasn't a word, really a word. But yeah, Huizemark has been my home now for 19 years. I started out as a training manager, and 3 years later became COO. The company was established in 1962 by Pitjeng, and it still belonged to Pitjeng's son until last year, together with his partner Brian Bilo, who's now the sole owner and shareholder of our company. And Adrie retired. We didn't fire him and we didn't demote him from CEO, so at least he's in a better position than Herschel today. But myself, I'm also involved in training of real estate agents since 2008, when the new act came about, or the amendment to the act. I have a training academy, so I see to agents not only Huizemark but countrywide, to major brands and the smaller agencies, to help get their agents on their feet in terms of the occupational certificate, which is now the requirement. So I'm kind of busy, which is very exciting, all real estate related. What can I say? I'm a real estate person. I don't know everything about everything, but fortunately, with a company like ours, with our top management, all have been in real estate for longer than 30 odd years, it's easy to pull on each other's strengths. So that's me. As I said, I live in Somerset West. Came from Bedfordview about 8-9 years ago. Will not go back to Gauteng. Very difficult to afford property in the Western Cape. I still have my properties in Randburg and surrounds, but the prices are very different, very scary where I am at the moment. In terms of the market, I think Herschel said most of what is to say about the market. The sentiment has definitely improved after some interest rates cuts last year. I think also the business and consumer confidence got a boost with the GNO, and also because of load shedding that was suspended. I think that all of us know that when the consumer feels happy and positive, they're buying. If they are uncertain, they don't buy. And we've seen that in the property cycles over the years. We've seen it since the interest rate cuts started. There's been an increase in activity in the market. Although the market performance since November, so November to January, has been consistent with a very, very slight growth, but basically the same. I also believe that the politics affect us to a very, very great extent, and should the VAT increase be finalized, it will have a very big impact again on consumer confidence. The Expropriation Act came about, Mashilo, after I wrote that article. That could have a negative impact, but people forget about the positive impact of the Expropriation Act that will definitely boost transformation, but also facilitate land reform, and also give us opportunities for more development, more social housing coming in, and so forth. So it's not all bad. I think that the market will continue to grow this year. And, you know, being in real estate, I always say that we're driven by hope, and we must continue hoping and believing that things will be better in the time to come. So we're looking forward to another rate cut on the 20th of March. I agree with Herschel that it's probably not going to be three more cuts this year, maybe less, but we will definitely see some cuts, and that always helps. I think that is me. I do believe there's a lot of opportunities. We're definitely going to talk about that more, and the current trends in the marketplace that I'm sure we all know and have seen. Thank you, Mashilo.
Thank you, Adrie, and thanks for your thoughts. It's quite an interesting. You are probably one of the very few people that admittedly admit that for some of us, our pockets are not geared for the Western Cape. We are better off sticking to either moving up north or sticking to Gauteng, where we can afford. I know a few friends who have moved out of the Western Cape to come here because apparently the prices here are affordable. But thank you very much, and thank you for your thoughts. Next, would have Mr. Kura Chihota around some of the, not only sharing about the local market, but also sharing around what happens around us regionally, within the region. And one of the big things I got fascinated when I saw that he's on the board of the Africa Real Estate Network, and to be able to share, because one of the things that we know is that a certain proportion of, as I said, of participants in our market are from the continent, who are buyers into our market. But at the same time, there are many entities within our market that are bought outside, whether you talk about grid or you talk about a number of entities that have established themselves outside the boundaries of South Africa, and they play in those markets. And Kura will be able to make us understand the local market together with what's happening around us and what happens specifically. Kura, take it away.
I thank you, my leader. I trust my screen sharing is available to you.
Your screen?
Yes, yes, yeah. Okay, good afternoon,
Yes,
everybody.
I can see that. Thank you.
Thank you very much. So, Mashilo, when you put up the flyer and you put my national flag there, I get very patriotic and want to tell you everything that's happening in our wonderful teapot-shaped country. Herschel, good to meet you. Adrie, good to be on the platform with you. And I look forward to an exciting year ahead. So in keeping faithful to the brief that I was given, the trends that we're seeing in our little teapot-shaped country, I will go through them quickly, but I will share this presentation with whoever wants to go through it in a bit more detail. So everything in real estate in Zimbabwe hangs on currency and economic stability. I'm always impressed that a Zimbabwean can tell you exactly where the rand is to the dollar, as opposed to a South African being able to explain to you the rate of the currency. So we're very keen currency watchers, and that really drives the sentiment in the market. I'll then go into specific sectors and just give an overview, and it ties to some of the things that are happening in South Africa and some of the things that Zimbabweans do when we come down to South Africa. But I am Kura Chihota. I have been a property practitioner gratefully from the day that I left school. I walked out into a job in a property training or property valuer's office, literally the day I came from school. I thank my late great mom for getting me on the track. I came to South Africa in 1994 and joined Wits University. Wits gives you the edge. Leaders are created there. Mandela is one of our alumni, so expect great things from us. I did my BCom in property economics there and was really in South Africa in 1994 in a wildly exciting time. So I grew into commercial property broking, into residential sales, with some partners. I was a minority partner. We created a network of agencies called Leapfrog Property Group. I did some work and smiled a lot on TV with the likes of Herschel and Mashilo. Good to see you again, Herschel. I think with Herschel, we've trained thousands of estate agents together. We did a series for what was then the Estate Agency Affairs Board that we put out on TV, and we really got into the nuts and bolts of how to run an agency and what it would be about. But my focus has always been on commercial. What does this pile of bricks, what cash flow does it do? And what can we put as a value to a cash flow? So I'm more commercial, but I am with EXP Realty. It's a virtual agency. So all of the fancy support, tech support, database, CRM, all the rest of it. We are South Africa is one of 26 countries around the world that has EXP. EXP itself holdings is listed on the NASDAQ, and it's a multi-billion rand corporation. But I'm here with you as a simple property practitioner looking in the market and seeing what is going on. So my Zimbabwean view is that our currency has had remarkable stability. We've had a new Reserve Bank governor, and he has really put on the brakes in what was a runaway inflation and a runaway currency depreciation. I know in South Africa, you guys get rather excited when the currency moves by 50 cents from 1850 to 19. It's, oh, petrol price is going to go up. In Zimbabwe, we can have things as radical as 45% decrease in the Zimbabwe dollar value overnight by a pronouncement coming out of our Reserve Bank. So we've had stability for the second half of 2024, and that has somewhat constrained what people have been doing with real estate, using it as a speculative asset or using it as a store of value. All sales are conducted in United States dollars, and I think that largely explains why we have always had the Pam Goldings, Chas Everett is coming back to Zimbabwe, Remax is here, Rawsons are here. The ability for dollars to be transacted and agents to earn real dollars and remit franchise fees back to South Africa, I think shows a trend and a strength of the Zimbabwean market. My colleagues in the Pam Golding Zimbabwe office are often Gold Club members within the Pam Golding Group, just showing on a regional basis that our Zimbabwe dollar pricing and the earnings from our agents is regionally competitive. Real estate remains an anchor on the balance sheet of our pension funds and insurance companies, comprising at least 50% of value there. So it's really, really important to all of us. Residential, we do not have a viable mortgage market. I know, Herschel, you will talk of trillions that are outstanding in mortgage loans in South Africa, and you watch the interest rates and 25 basis points get you guys excited. Our base lending rate here is, and you can grab a handkerchief, Adrie, when I tell you that we're paying upwards of 16, 17% in US dollars for any mortgage that you can get. And wait, that's not all, as they'll say on Huizemark. You will have to pay back the mortgage interest and capital in about 5 years. So borrowing is not really a thing in our market. So what that pushes people to do is to invest in real estate out of savings. So they will buy a stand out of savings, maybe get an installment sale agreement out of a developer, and then buy some bricks and then build a cottage at the back and then extend. So our greatest activity is buying service stands. There is great demand for any adult Zimbabwean who has some sort of cash flow, be it from selling tomatoes or being a YouTube influencer or trading gold, they want to buy assets in Zimbabwe. So when there is a clear path to title, where ground is serviced and you can see a title deed from a reputable land developer, there's great investment. And that case has been proven by one of our developers in the north of the country, in northern Harare, concluding 3,000 sales agreements within an incredibly short amount of time. Prices are under pressure. We have limited stock. Our deeds office only has 250,000 or so registered properties that you can trade at the deeds office. A lot are developer sessions, i.e. the final deed hasn't come out. So there is a very high scarcity value to completed assets. So you're avoiding development risk and people are storing value. If you've made 100 or 200,000, you don't know to keep it in the bank. You might not necessarily want to keep it in a safety deposit box, but if you buy it in real estate, you're going to get in dollars and you're going to get out in dollars. So we had a period where a lot of the urban stock was absorbed by, let's call it credit extension by the central government. A certain tier of civil servants were given mortgage loans on very favorable terms, and they really bid up the market. And anything in that 200 to 400,000 market was really snapped up. And that is evidenced by some developments by a developer friend of ours, Pokugara, done by West Prop, listed on the stock exchange. They have sold out an entire area in this sort of a price range. Clusters, as we've looked across south of the border, there's a great demand. The dynamics are always changing. Smaller families, secure lock up and go, where people, I always say I grew up on 10,000 square meters in a single family household. That is just not sustainable anymore. People are subdividing stands in great locations in our Golden Triangle, and then densification not only is a central government policy, but it's a market response. But the supply has come on, and we have seen up to 7,000 units planned by the city council in terms of permits that they've issued. The demand has been great, but there is now a challenge in further permits. And because the supply is now picking up, there's pressure on prices where those two meet. Once we've got that kind of equilibrium between supply and affordability now comes into play, and there's a cap. It used to be quite easy to say, I'm going to buy a cluster for 300,000 and I'm going to get a tenant who pays me $2,000 a month. I think there's been some significant challenges on the affordability in the employment sector. In the past 2 months, 3 banks have notified the market of significant retrenchments. So banks and other formal employers are under pressure. They are reorganizing themselves, and the ability to pay is putting pressure on the residential rental market. In commercial, we see the decanting of our CBDs. I put it in the active voice. They're being killed. It's not a natural death. It is by parking legislation, by degradation of the services that are there, power, water, aging infrastructure not being repaired, and by regulation. They're not enforcing bylaws and keeping controlled vending, commuter taxis, operations, illegal mshika-shikas. We don't have a South African parallel to that, but it's not a pleasant environment. So businesses are voting with their feet and they're moving north. With that move north, that puts significant pressure on any northern suburbs or non-CBD office complex that is available. The likes of the Old Mutual or the First Mutual, they're expanding their portfolios in this place. And the rentals, there's a significant premium. In town, you can get A-grade offices at $7, $8, $10 a square meter. If you go into an office park outside of Harare, you are going to be knocked $20 and rising. Banks have been large occupiers of space and employers of quality employment, providing quality retailers who want to sell good stuff to bank employees because they're liquid. They are moving out of town. They're building northern suburbs offices, and that is going to have a market impact. That I can't see anybody plugging the cavity that that's going to leave behind. There is some mediation of that. There is limited uptake of the space in town. The central government has been buying assets downtown, and that's coming in at a sale price of less than $600 a square meter. So you've got to wonder why is there that discount, and does it make sense to build with your costs being significantly higher than that? So I think the CBD markets are going to remain under pressure for any new stock coming on. But thankfully, we do have a swallow going against the summer. We do have a shiny new building loading up. And when this building adds to the Harare skyline, I think we'll all be quite excited that in the last 20 years, at least, we've seen 2 new modern high-rise buildings coming through. Retail, I'm not a soccer player. I am a soccer fan. So Mashilo, I'm going to skip over any references to Kaizer Chiefs and Orlando Pirates supremacy right now. But it's a game of 2 halves. The established retailers are really under pressure. So you see that we've had currency issues before where a retailer is compelled to sell and accept local currency at an artificial value when his stock replacement costs are going to be high. But at the same time, we have a populace that is increasingly sophisticated and looking for new assets. So we've got new stock coming in at South African levels, I will say. A particular developer, Frontier Real Estate, has developed assets new and shiny that will have tenants that any South African would recognize happily. A Spar, a Pick n Pay, Rocco Mamas, Steers, Nando's, all the rest of it. So those assets are coming on, and it gives us an idea that there's pent-up demand for new assets with a decent car park in front, and then modern tenants in a layout that has some sort of a food court, so that when we have the time and the disposable, we have a pleasant environment where the kids can play in the fountain and go on a little jungle gym, and the family has some quality time. Our downtowns are becoming just like, if you can imagine this Johannesburg CBD with Bree taxi rank or Noord taxi rank, high commuter traffic, and then the spaces that are being left behind by retailers. Excuse me, that's a noisy neighbor playing with his toy outside. The space in town, we've had the demise of our department stores, our Greatermans, our barbers. That space has been replaced by survivalist enterprises where people have a small shop and they import stock and they're selling it really for survival. But that industry is significant. There are over 10,000 registered businesses trading within the Harare CBD out of those small cubicles. Our formal retailers are under significant pressure. As I've said, their stock outs, the latest numbers I've seen out of OK Zimbabwe with their trading update is that their stock levels are at 50%. I don't know, Herschel, how you would feel if you walked into your local Checkers and there was at 50% stock level. I think it shows a huge challenge in the viability of these businesses and going forward. We've had Truworths go into business rescue. Their business model, they were largely on credit. Credit in Zimbabwe is not a winning proposition for a financial service provider because our inflation and our currency issues erode value. So Truworths has effectively been sold for the princely sum of $1 US. Choppies, shareholder issues, but as well the operation on the ground issues, they are in flux. Some saying it's been sold, some saying it's being relinquished, but the formal is really under pressure. And I think that then flows into the property space, that what you considered was a blue chip tenant is now a questionable proposition, and you've got to really understand what your fallback is. Industrial, the new stuff, again, game of 2 halves, the new stuff, flying, sexy, uptake. What does that mean? You've got to have a high ceiling, anything 3, 4, 5 meters to eaves height. You've got to have dock level loading so that a Pantechnicon can reverse and you can quite swiftly clear out a 30-ton truck, loading, offloading, and off you go. In particular nodes like Pomona in northern Harare, we've seen values for industrial land literally skyrocket. It's been the make money opportunity of the past decade. I worked with a developer when they're putting out stands at $50 a square meter. I'm being told that industrial stands in the latest phase have been transferring at $250 a square meter, and that's within a 10-year period. Other than that, other players are investing a lot in the tobacco space. Over 100,000 square meters of really new, really modern space has come on for owner occupation, and rentals are chalk and cheese. The old sawtooth built-in Rhodesia, UDI, replacing import replacement kind of Southerton kind of product is $3 and less. But if you come north to a Pomona or Masasa in the new stuff, you're going to pay $4 and rising. $4 being conservative on really large space. On smaller pockets of space, you're going to pay $15 on the smaller stuff in Pomona and about $10 for 1,000 square meters of new stuff in Pomona. The listed sector, an area of focus for me. We do have real estate investment trusts. 7 are licensed, only 2 are trading on the market. The conditions where money has been tight, 2 more funds were supposed to come to the market late last year. They haven't come along, but the corporate activity is there. If you've got a product and a track record and you're paying dividends, you're going to receive capital. If you're selling a story that we're going to develop something, there is some reticence from the market to put very real dollars into that space right now. But institutions have a development pipeline of at least $150 million in our little nugget, our little Cape Town called Victoria Falls. So to put a broader gloss on everything, Quo Vadis, where are we going? Property remains a desired asset in Zimbabwe. Dollar pricing is de facto. No one is going to accept Zimbabwe dollars for a significant asset, maybe for a stand at $10 or $15,000, but no, not at commercial levels or a household level for 200,000 when somebody is retiring. Property development, where you're adding value to a piece of ground and giving somebody security and title and high utility, people are going to pay up for that. Because we're doing that, our services are not keeping up. Water provision, power provision, widening of roads, we are not there. We have not had a significant increase into water supply. And basically, when you improve a township, you are going to put in the substation and donate it to the residents, or the utility that then charges to the residents. I'm going to leave it there, Mashilo.
Thank you very much. Yeah, I mean, you gave us a mouthful in terms of what we should expect and what we should look forward to in terms of the market beyond our borders. It's going to be a quick shot, and I'll go around. There's several areas that I'll cover, and then from there we'll go into Q&A in the next 2 minutes. And that quick shot is around very specific points. The first one, it's around, let's start with the latest one, which is the easy one, is expectations on, and I saw somebody did a calculation on VAT to say a 2% increase on VAT from 15 to 17. It doesn't move VAT from 15 to 17%. It moves it from 15 to about 15.3% because the margin of change is not the full 2%. Now, those are mathematicians talking. We feel the 2% when we go and pay. So what are our expectations in terms of, and I'll start with you, Adrie, in terms of any fiddling with the tax? I mean, already your buyers are squeezed with regard to the fact that your Eskom is increasing, or they're asking to increases in double digits. Although they didn't get the 30% they wanted, they're still going to be paying in double digits. And I'll ask Kura. Kura is a Zimbabwe South African, so he knows these things in terms of utility prices and how that effect is, both visible and invisible tax. Your comments, Adrie?
Yes, thank you. I do believe that it will be more difficult to qualify for a home loan because there's a reduction in disposable income. A VAT increase is inflationary in itself. So it will, I believe, without a doubt, have an effect, whether it's short-term or long-term. One wouldn't know. I would hope it's short-term. Already the banks have increased their deposit requirements due to bad debt recently. So I do believe that increase will have a detrimental effect on our buyers, and unless they've got a higher deposit and cash in the bank, we're going to see a very definite effect.
Herschel, your input about affordabilities. I mean, have we seen that the increases in utilities? I mean, somebody says over the last 7 years, Eskom prices have increased by 200%. Have we seen that discouraging people in coming to the market? We know that on the commercial side, load shedding has affected operating cost and affordability of rentals. But what have we seen in other markets with regard to these above inflation increasing across the board on affordability and the ability to retain clients, both on rentals and on the purchase side?
Thanks, Mashilo. And Kura, nice to see you again. I was offended when you said nice to meet you, but then you regrouped. So well done for everything you're doing in the Zimbabwean market. So listen, I think that the concept of consumer affordability is a very sensitive issue, and listening to Adrie, and I remember seeing a headline in the paper some time ago, possibly in the Business Day, and the headline was something around things feel better, but we still feel poor. And I think that's probably the case. I mean, if you look, certainly consumers have been under massive pressure over the last couple of years. We've been in a period of sustained high interest rates. Number one, relatively by South African standards. Number one, petrol prices have been high. Food inflation, excuse me, has been high, and consumers have been under pressure. But there does seem to be some release of that pressure. And if you look across some of the indicators across certain industries, for example, in the retail sales, some of the retail consumer groups seem to be delivering better results. The retail auto industry for the first time seems to be showing a little bit of growth year on year after a sustained period of drop. We're seeing better sentiment. So if you start to, and better activity and better buyer demand, so if you start to have a look at it, so interest rates have come down. If you're a first-time buyer in that sort of R1 million mark, it's added 600 or 700 rand per month to your affordability calculator. So either you're going to buy up for the same, or you're going to buy less, taking into account for less, or the same for less, taking into account lower interest rates. If you factor in petrol prices, they have gone up, but over the last year, they've probably come down cumulatively 5 rand per litre. It's a fairly substantial amount of money, and that probably adds up to, maybe 500 or 600, 700 rand per month, depending on how big your tank is. So I think that consumers feel that there is some light at the end of the tunnel. I do think that the banks are keeping a close look on affordability. But the one thing we have seen in terms of the South African residential market, which has been under pressure, the banks are also fighting for business. And so what we are seeing, you spoke about that Uber research report that you had picked up. What we are seeing is that the average concessions, in other words, the rates that the South African retail banks are offering their clients, are probably the most competitive they've been in the last 5 years. And on average, and I say that carefully, on average, most consumers now across the 4 retail banks on average are borrowing at marginally below prime. And by South African standards, and that may depend on whether you take 100% loan to value and all sorts of factors, but I generally think that the affordability is still potentially not good, but I think that it's better than it has been now for some time. And we are starting to see some early indicators of that in the first-time buyers market, and in the rental market, where escalations are getting better. where buyers and renters are most price sensitive.
Yeah, I mean, Kura, just your thoughts around the fact that there's this notion that says that as affordability gets squeezed, either through costs that you have to carry as a property owner or a landlord, or through the interest rates, what tends to happen is majority of people just downscale, and then instead of me living in a mansion in Sandton, I'd rather go live in a back room in Soweto, then repatriate the money, whether to Limpopo, to Harare, and then buy a piece of land there and finance that, as opposed to rather live a modest life here and finance a property in Venda or a property in Harare. What's your sentiments around that kind of a market shift that it's observed by certain people?
So I think you and I spend a lot of time in those A20-something gates at OR Tambo. And you go and see how the rest of this continent operates, and then you see how this particular South African market operates. I think given the price rise shocks, where we saw interest rates in South Africa move from the 7th percent in the boom times to the COVID-induced or post-COVID-induced 11-point-something%, that 5%, that 500 basis points move was significant and put so much shock and pressure on people's pockets that I think you've seen, and Mashilo and Herschel, you know of this association known as the South African Multifamily Residential Residential Investors. So you've seen the huge developments being done by the likes of House, where you can see 5,000 to 7,000 units purely for rental being put on the market, be it on 14th Avenue in Weltevreden Park or Ndlovu there out in Midrand. I think a South African has taken a balance sheet view to say, look, owning this property asset with the exposure for rates to go up so significantly, and couple that with a petrol price increase, couple that with inflation, I do not want to necessarily absorb and subsidize owning property, so I'm going to rent. So the reflex is property now has utility value, and people would rather live well in a 2-bedroom rented apartment and then buy the BMW, or indeed, as you said, put money somewhere else. When you're looking outside in, remember that Gauteng is the economic center of gravity, and you have an inward migration of thousands of people per month. You see it in the shortage of schools, and you now see it in investors. Zimbabweans are coming across the border with access to 150,000 US dollars. And when you're putting up a new tower in Sandton, they say, you want 2 million rand? Quick calculation, that's less than $100,000. And Bob's your uncle. They're coming in and squeezing out local players, buying for cash in particular notes.
Yeah. Yeah, no, that's quite interesting. It's a quite interesting observation. Ladies and gentlemen, those that have joined us, the attendees, you're welcome to raise your hand. Either put your questions in the chat and I'll pick them up in a minute, or raise your hand and then we'll open up so that you can be able to ask your question directly. I mean, my next question to the panel, before I go to all of the delegates that have been able to attend, is around geopolitics, and I know there's a question that has been asked already in the chat. Herschel, in your presentation, and Adrie, you did say the same, to say that you spoke about local politics, how they impact Adrie, the property sector, and how they have, depending how positive or negative they are, they bring about headwinds into the sector. And Herschel, you spoke about the international impact. Now, there's a question that I'll ask, which comes from the audience, but there's also a question that I was going to ask, but I'll start with the one that's from the audience that says, has there been a response to the property market since President Trump sanctioned South Africa? Any of you are welcome to take it.
Michelle, let me try and answer that. So, you know, what I often talk about in our organization and to myself is you know, you gotta know what Trump is saying. You gotta understand some of the what's going on globally. But ultimately, what you've got to focus on is controlling the controllables. And I and we have no control over what President Trump says or what he does. In fact, I think our government is finding they even have no control of what he says and clearly what he does. So I think that's the first point. I think the second point is that the residential market, specifically residential, but maybe commercial as well, is driven by two fundamental factors. One is financial, which is around affordability, interest rates, consumer income, and on the commercial side, on yields and returns, and the other side is on sentiment and confidence. I think when President Trump makes some sort of statement, I think that the real potential impact is felt more maybe at the top end of the market, excuse me, and in the commercial sector, which is far more driven maybe around sentiment and confidence. But in the residential market, there's always an underlying turn of property and demand for your first-time buyers, for young people now getting married, starting families, holiday homes, retirement living, downsizing, renting. So I say it carefully, they're important. If you ask me where we need to be focusing as a country, as an example, I'm kind of skating on thin ice, but I think we should be voicing our deep concern and outrage about the fact that our government is asking us to pay an extra 2% in tax for their wastage and incompetence around infrastructure and schools and many other parts of what we're spending. I often say I have no objection to paying the rates of tax that I do. What I object to is how little we get back at any level in the country for the taxes we pay. So I think, when Trump shouts out whatever he wants to shout out, we have no control of it, not me nor our government. I think we need to be focusing our time and effort in making sure that, for example, our leaders are held accountable and that we continue to invest in our country and make a contribution to growing our markets and our infrastructure. So that would very much be my view.
Quite true. So, Adrie, I'm going to ask a very difficult question in the sense that I'm not expecting you to be a political commentator, but I'm borrowing from the point that you were making around us dealing with inequalities and inequalities in housing, because specifically you're saying, at some point we've got to address that. And the question goes as follows. We have seen the government changes in Namibia. For the first time, they've got a female president. We have seen changes in Botswana. We've seen what's happening in Mozambique. And obviously locally, we've got a GNU, and there are elections that are coming in a year or two in some of our neighbors. And the ability to make sure that those are stable influences how we get the impact, which is what Kura is referring to say we will get an in-migration with regard to whatever that's happening outside. What that means is that the housing headache that we have, I think I share the same sentiment that says the expropriation bill might help us to a certain extent, but that housing headache where there's a backlog remains, because we're not only solving for just the backlog that we have as a country, but as practitioners in the industry, is to find what are the alternatives that we can bring onto the table, because we've got other needs that residential must cater for beyond just our own local needs, that has to cater for other things that may not have been of our own creation. What's your views on that?
Yeah, that's a difficult question, if I may say so.
Yeah.
And it has a lot of facets to that question. The need in our society is definitely social housing. I believe there's also opportunities in terms of social housing, student accommodation, very important. We've seen that there was a move to a multi-generational living and joint ownership over the last years, and it's all aimed to combat the higher inflation and reduced disposable income. So I also just want to point out that financial pressures have been the reason for selling in the residential market. As much as 24.1% of people are selling due to financial pressures. So there's a need for development of houses that is affordable by the greater market, and that would be under R1 million. So I think if I remember the figure correctly, 42% of all home loans goes to properties for less than R1 million.
Is that why we're seeing alternative products that are coming onto the market? I mean, you see, TAF has been around for quite some time, but you've got other products, ICASI Fund and all of that. Is that the reason why we can attribute these alternative products, both on the funding side and also on the actual housing products that are coming onto the market? Would that be explaining that reason to try and close the gap? Adrie?
Yes, I do believe that is it's the reason for that. We've got to keep looking for methods and alternatives to close the gap, because there's just too many people without a place to stay, and I'm quite passionate about that. That we've got to get people into homes. You know, even when we look at retirement homes that's available, affordability is a problem because every developer is building high-end, very expensive homes, where retirement homes at an affordable price, that is also an aspect that we've got to look at. I'm not sure I'm answering your question there.
No, you are, because the reasoning that has been given for this creation or this emergence of new products is because the traditional products are not catering for the current market. 82 square meters, family size units or multi-family size units are not catering for the market. And the tenure system that we have is not catering for the market, hence the emergence of these particular products. If I may turn to you, Kura, I've got two questions that come in on the chat. And then also, I'm going to ask you specifically around the listings, both in South Africa and in Zim. But if you can take these two questions together. One is this, from Marilyn. It says, what would you attribute the retail closure in Zimbabwe? The next one is, what has contributed to the significant increase in the restaurants in Harare? If you can pick on those, then I'll ask my question.
Sure, thank you very much. The challenges around the retailer is retail is a game of moving value in volumes at a profit. In South Africa, you can look at Pick n Pay or Checkers numbers, and you see that they get Coca-Cola to deliver a case of Coke today on the 20th of February, and they pay Coca-Cola 90 days hence. They would have sold the Coke because we're going to go to the stadium. They're going to sell the Coke in a short time. And then they have the cash value in their hand, which they can do a lot of things and spin with. So the Zimbabwean dilemma is that if you sell a product today and you're doing it in official currency, when you try to replace that stock, the price is likely to have risen because of the depreciating currency. So your ability to replace stock for you to make money and essentially spin somebody else's money is not there. And you can only do that for as long as your shareholders can provide you with that, or some sort of support where the government gives you money at auction rate, or what was auction rate right then, where they're mitigating the effects of a Zim dollar being worth less in 30 days than it was 30 days ago. So the retail model of using suppliers and riding them to generate a return is not available in Zimbabwe. So that creates challenges, the mismatch. If they get $1 billion Zimbabwe dollars in, they cannot necessarily go out and buy stock at a margin and sell it and make money for themselves. So that's the currency that I think the smaller guys, If you walk into a boutique at Highland Park, you can pay them $10. And that $10 goes and buys stock, and they bring in something else from Turkey or China or South Africa. So the smaller guys are under the scrutiny of the Financial Intelligence Unit, which audits and looks at Pick n Pay's numbers far more with greater detail than looking at Kura's boutique that just turns over a few thousand US.
Yeah, I mean, in retail, in my other life, I used to run a retail liquor business. And one of the things that is very important in retail is you have to have a guarantee of distribution and guarantee of supply. If you don't have those two things, there's a reason why you'd find that Checkers has got a distribution center in Centurion, because they have to guarantee that distribution to their stores. At the same time, in doing so, they're guaranteeing supply. So if I order from SAB on Monday 60 pallets of liquor, by Friday, when I replenish that, SAB knows very well that I'm going to come back on Friday, because within those 4 days, I would have finished that particular supply. So I need to have the guarantee that when I arrive on Friday, I'll find the stock, or else my weekend is dead as a retailer. So as a result, I'm going to move away from SAB. I'm going to go somewhere else where they can guarantee my weekend supply. So I get your point that you're talking about. Just my question around the listed sector, and we are going to close in a minute. And then I'm very cognizant of the questions that are in the chat, and I will try and do a quick shot on them before we close. Is that one, and this applies to, and I'll check this question with all of my colleagues here, is that we have seen the maturity of listings both here and anywhere else on the continent, except in the US and in many European countries, that residential gets to get a flavor in those markets. We have seen maturity of listings with regard to other classes of property, but we haven't seen depth of residential going on to the bourse, even though that we know in terms of numbers that the residential market and the residential industry in real estate, that sector, by volume is responsible to close to 85% of the volume per year. And then by value, it's responsible for more than 70% of the value that is in the market. Why is that? Why haven't we seen a great participation on the listings on this continent, in particular in South Africa, and also in the markets that you have worked in, Kura, or where residential is put up onto the market? And then I'll check with my other colleagues as well. Why is that particular instance? Kura?
I believe it's because human beings are tricky. So as an institution, I have no problem in taking a court order and suing for default rent against another corporate. It's seen as fair. If I am Old Mutual or Sanlam, I do not want to have 3,000 tenants who might be religiously paying. And when you stop paying, for me to be seen as a corporate taking my massive corporate muscle and squeezing out a single mother with a battling child, it has reputational risk for me. If you look at our financial system, Mashilo, you and I look at developments in South Africa all the time. There's a formula. The banker wants to see 70% national tenants with 5-year leases of a certain credit criteria. No one wants to do the mathematics to aggregate a block of flats with 200 individuals with pay slips. The maths and transacting and the credit worthiness of that group is seen as less than when you can let 5,000 square meters to a ShopRite. So I think it's the prejudice against the little detail, and we don't quite yet have the technology to aggregate all of that into a safe number that I won't call them lazy bankers, but that a banker can apply a credit rating and say, look, with our capital at risk, I think we can take a safe bet on this. Be that as it may, that the market is significantly deep. And if you aggregated all of those $5,000 rentals as the houses are doing, as the Century developments are doing, I think there's a number and there's a missed opportunity that's there. I think on our exchange, we have 3 listed we have 3 people who've got significant listings in the residential space because the market just doesn't trust them yet. And it's not that they're not bad operators, but it's the underlying quality of the cash flow, I believe.
Herschel, I mean, the same question. I mean, the residential market is very deep. I mean, the franchises are mature. By the last measure that I remember, the residential sector was valued at, in terms of size of market, at close to about 6 trillion. I mean, it's even bigger than JSE on itself. Why is it we only see Baldwin and a few others, Calgro, M3, and their construction company, I'm very aware. Why do we see only those few that have ventured into the market in order for them to try and either raise capital or whatever else that they do on the market? We haven't seen quite a good play on the listed front.
Listen, it's not my area of speciality, but I mean, as you can see, you know, this whole concept of what they used to call gash housing. I think Samarkand started it in South Africa a number of years ago. Kura, maybe you'll remember them well, and I'm sure Adrie as well. You know, gash standing for good address, small home. You know, it was an opportunity to build sort of sectional title developments with kind of lifestyle swimming pools and clubhouses into areas where people would have more access into much better areas at a fraction of the cost. And then we've got the Baldwins. But I do think it requires a significant amount of capital. And then within South Africa, you've got RBI homes and cosmopolitan homes, which sort of are more in that lower priced, affordable housing market. And, you know, for the most part, you know, lots of those companies are listed, and specifically about raising capital in order to venture into those types of markets. And you can see, and I say it carefully, I mean, if you look at Baldwin, which once again has taken that whole concept to a whole new level over the last couple of years, but last year and the year before, in a high interest rate environment, was a very difficult year. I think they literally sold half the number of properties last year than they did the year before, or the year before versus previous to that. And, you know, now they've got the resources and the deep pockets to go in and turn the unsold properties into a rental portfolio. So I think potentially that is one of the challenges, but I think Adrie is right. There's a critical shortage of housing in that sector. And hence, as Kura has said, you know, you can rent that type of property at a fraction of the price, but once again, you know, you got to have access to massive resources in order for you to hold that as a rental portfolio. But that's where a lot of the opportunities sit.
Right. Adrie, there's a question on here. It's nearly related to what we're talking about, but it's nuanced differently, and then we're going to go towards closing after this. The question is, could anyone provide any idea around the profitability of if institutions are involved with affordable housing, student accommodation, township development? How are these sectors performing compared to other sectors, other traditional sectors, both in residential and commercial? How are they performing, these new alternative markets we were talking about that are coming up? Adrie?
Mashilo, I must be honest, I don't have percentages. The problem, as Herschel is saying, you've got to have deep pockets to do these developments. Unfortunately, I don't see a lot of government funding for the developer to take up the challenge for student housing or for social housing. So it's got to be somebody with the financial backing to venture out on these developments. And that is not easy for an individual to tackle on his own. So in terms of percentages, no, I can't tell you what it is. It's also not my field of expertise, but it's definitely a passion of mine to see people in homes and students having a place to live while they study and upskilling themselves. So it's an important part of where I think opportunities lie in the future is for somebody to take that bull by the horns and actually run with it.
Mashilo, can I dare
Sure.
try put a 2 cents in there?
Yeah, do that quick, and then we wrap up.
Sure.
And do your closing comments as you do that.
Sure. I think the opportunities in the South African market are that student accommodation that has become significantly sophisticated and a word I learned and love to use, bifurcated. You and I are Witsies. We can go to Jorrison Street, and where you and I used to hang out and have beers in cheap pubs, there have been 11, 12-story buildings being put up by specialists like Growthpoint. They are putting $10 billion rand into this space to provide hotel-like accommodation for a select category of students. Behind that premium sort of level product comes the more NSFAS targeted at 45,000 rand a year cap kind of rental properties. So the student space has received a lot of direct market response, a lot of state response, and then sadly, you will find some market players doing things out of their own pocket at $1 million or $2 million and not providing a truly great product. And that truly great product is provided in some of our what we would call historically Black institutions around Turf Loop, Univen, and anywhere else where we had these disparate or these distant locations. The townships, there is money going into there. The likes of the Trust for Urban Housing Finance, they've specialized in inner city, but they have a product, Umastandi, and they are looking to follow government policy as well, to put back rooms in an organized manner, in a sustainable basis with a quality product, and that product is growing in strength and strength. Behind that, you have councils. Cape Town has gone very inclusive. They have on a 200 square meter stand an open policy that you can go up to 12 residential units, these back rooms, on 2,000 square meters before you start interacting and looking for rights. So the market is there. And I think where people are constrained by affordability in renting a sectional title with levies and what have you, going for smaller, cheaper, but developed at scale opportunities, I think that's where you and I, as consultants and investors, make $1 or $3.
All right. Okay. Let's wrap it there before we take more time of everybody than we have asked for. Thank you very much, Herschel. It's been a pleasure to connect with you again. And Adrie, when I'm in Somerset, I think I'll be in Cape Town very soon. We'll probably grab coffee. These are Joburgers. Kura is a pretend Zimbabwean. So thank you very much for your time. And also thank you to the Academy of Construction and Real Estate for giving us the opportunity to express ourselves and to be able to share the little bit that we know and a lot that we have experienced with the audience that we had. And thanks for the audience that have kept with us for the whole 90 minutes and the time that we've been here. It's been a pleasure. Guys, you can say your bye-byes and then we off to doing other things. Herschel?
Thanks, Mashilo. Thanks for the opportunity. It was a very interesting chat and questions and good to reconnect with Kura and Adrie. Nice to meet you online. And just once again, I think there are always headwinds. There are always challenges and uncertainty. But I believe that there are opportunities. There are opportunities in South Africa. Clearly, you're hearing from there are opportunities in Zimbabwe. And I think that's where we need to be focused, not distracted by the noises, not distracted by what people are saying. We need to focus on where the opportunities are and to control what we can control, both in the commercial and in the residential sector.
Adrie, 1 minute, just a short bye-byes.
Bye-byes. Thank you for the opportunity and thanks for the input from everybody around. I found it very interesting myself. And yes, I'm all with Herschel on this. We're positive about the year. We are positive about growth in our industry. Yeah, we're looking forward to a good year and to tackle the challenges together that will definitely help for all of us to take hands and work together in the future in our industry. Thanks a lot for the opportunity.
Kura, leave the best for last, and we're off. You have only 30 seconds.
In 30 seconds, thank you. In Zimbabwe, keep on putting your dollars into the ground. There's some mushroom in the ground that makes it grow in cash flow and value. The game is wide open, but if you hold dollars, you can invest and continue to harvest in Zimbabwe, but you can take some of the seeds and invest in other markets. The opportunities are there. Ke a leboga.
Thank you very much. Thanks, everybody. We couldn't go through all the questions that we have posed, but we will try and forward those to some of our delegates, and so that they can respond to them. Thank you very much. Thanks for your time. Enjoy the best of this year, and may whatever you do make you enough dollars and enough rands so that at the end of the year, we're all smiling. Thank you. Bye-bye.